Welcome to the weekly market update by Softlogic Stockbrokers. Market highlights from Monday to Thursday. By the end of the week, the ASPI was at 11,628, while the S&P recorded at 3,425. Market turnover averaged up to 2.9 billion. The top turnover generators during the week were JKH, COCR, PABC, Commercial Bank, and NDB. Crossings were mainly witnessed by Mills, COCR, PLC, and Rich. Local news. The CBSL decided to reduce the statutory reserve ratio on all liabilities of LCBs by 200 basis points, from 4% to 2% with effect from 16th August 2023. This move was expected to inject about 200 billion in liquidity to the banks, which would also help bring down the interest rates at a faster rate. The Cabinet approved to amend Employees Provident Fund Act to ensure a minimum of 9% annual interest rate to members during 2023 to 2026 period, following domestic debt optimization. Sri Lanka's tax collections in the first half of 2023 grew by 93% year-on-year to Rs 697 billion. The income from personal and withholding taxes grew by more than 100% year-on-year during the period. Tea production from April to June 2023 recorded a total of 74.3 million kilograms, showing a positive variance compared to 2022. However, tea export revenue for the quarter of Rs 99.7 billion witnessed a marginal decline compared to the previous year. Sri Lanka's tea exports to Iran under barter deal is set to begin this month, where the outstanding oil bill of $251 million will be settled by exporting $5 million worth of tea from Sri Lanka to Iran monthly for 48 months. During the first 6 days of August, over 30,000 tourists entered the country, and among the leading contributors to this surge were India, followed closely by United Kingdom, China, France, and Germany. Corporate news. Pan Asia Bank performed well, but their bottom line grew by 418% year-on-year to record 602.2 million. The bank reported a net interest margin of 4.24% during the first half of this year, while the impaired loan ratio stood at 4.15%. Ceylon Bank witnessed a growth in earnings for the quarter, recording a profit of tax of LKR 4.2 billion, which was a 104.6% increment compared to the corresponding period of the previous quarter. Cargill's in its June quarter results saw a growth in their revenue by 18.3% year-on-year to record 56.8 billion. However, the profit of 1.3 billion is a decline when compared to the last quarter as well as year-on-year. Sunshine Holdings reported a top-line growth of 14% year-on-year for the first quarter of the current financial year, while the profit tax contracted by 10.6% year-on-year to 1.4 billion owing to escalated admin and S&D expenses and finance costs. Hemas Holdings delivered a healthy performance in the quarter ended, where the group posted a revenue of Rs 29.1 billion, which was a 17.2% growth over previous years. Earnings were limited due to finance costs, but managed to deliver a marginal improvement of 1.2% to record 1.1 billion rupees. Aiken Spence recorded a loss for this quarter, whereas Aiken Spence Hotel Holdings were also underperforming owing to a drop in their Maldives segment profitability, with impact to the off-season. Moreover, Aiken Spence reoperated 2 garment factories under Ace Apparels, investing more than $3.6 million in the first phase, which have been closed due to American and Chinese crisis. Thank you for joining. Hope to see you next week.